Because of the complex nature of business finance, obtaining a line of credit without providing a personal guarantee has become an appealing alternative for business owners who are looking for financial flexibility without putting their own assets at risk. This financial tool enables firms to gain access to capital in a quick and efficient manner, which not only encourages expansion, but also serves as a safety net during times of economic instability. In the following video, we look into the concept of business lines of credit that do not require personal guarantees. We investigate how these lines of credit operate and the benefits that they provide to businesses. Understanding business lines of credit. A business line of credit is a type of financial agreement that is made between a company and a lender. This arrangement provides the company with access to a certain quantity of funds that have been predetermined. In contrast to conventional loans, which are typically paid out in a single lump sum, a line of credit gives businesses the ability to draw money whenever they are required, up to the level that has been granted. Because of its adaptability, it is a versatile financial instrument that may be utilized for a variety of purposes, including the management of cash flow, the coverage of operating expenses, and the seizing of chances that were not anticipated. The absence of a necessity for the owner of the firm to utilize personal assets as collateral is what differentiates business lines of credit that do not demand personal guarantees from other types of credit accounts. When it comes to conventional lending, personal guarantees are frequently required. This puts the owner of the business in jeopardy of losing their personal funds in the event that the firm fails to repay the loan. One solution to this problem is the advent of business lines of credit that do not require a personal guarantee. These lines of credit provide entrepreneurs a financing alternative that is both more secure and more appealing. How business lines of credit without personal guarantee work. Application process. In most cases, the first step for businesses that are interested in obtaining a line of credit without a personal guarantee is to submit an application to a financial institution or to an internet lender. As part of the application process, you will be required to provide information regarding the general performance of the company, as well as its credit history and financial health. Approval and credit limit. Following the submission of the application, the lender will conduct an assessment of the creditworthiness of the company. This evaluation takes into account a variety of aspects, including the revenue of the company, its credit score, and its financial health. If the application is accepted, the lender will establish the credit limit, which is the highest amount of money that the company is permitted to borrow. Accessing funds. A line of credit that has been approved allows firms to draw cash whenever they are required, up to the amount that has been established. This flexibility is especially beneficial when it comes to handling swings in short-term cash flow or dealing with expenses that were not anticipated initially. Repayment terms. For business lines of credit, the conditions of repayment can vary, but in general, they require making monthly installments that are determined by the amount of the outstanding balance. Due to the fact that interest is only charged on the amount of funds that are actually utilized, this type of loan offers cost savings in comparison to a conventional term loan, which charges interest on the total amount of the loan. Advantages of business lines of credit without personal guarantee. Asset protection. One of the most significant benefits of a business line of credit that does not incorporate a personal guarantee is that it protects the personal assets of the business owner from the potential hazards that are connected with default. In the event that the company is unable to repay the line of credit, the lender is not permitted to confiscate personal assets because there is no personal guarantee at the time. Financial flexibility. Lines of credit for businesses offer an unprecedented degree of flexibility, enabling companies to borrow only the amount of money they require at the time they require it. In particular, this flexibility is advantageous when it comes to the management of working capital, the coverage of seasonal expenses, or the implementation of unforeseen business prospects. Builds business credit. A favorable impact on the credit profile of the company can be achieved via the successful management of a business line of credit that does not require a personal guarantee. Repayments made on time and judicious use of credit both contribute to an improvement in a company's credit score, which in turn opens the door to more favorable financing terms in the future. Quick access to capital. There is a significant benefit associated with business lines of credit, and that is the quickness with which funds may be accessible quickly. After receiving approval, firms are able to rapidly draw cash, which serves as an essential lifeline in the event of unexpected events or opportunities that call for prompt action. When it comes to the ever-changing environment of company financing, the availability of lines of credit that do not require personal guarantees has completely transformed the way in which entrepreneurs obtain funding for their businesses. The use of this financial instrument not only gives business owners with flexibility and quick access to funds, but it also offers a level of security by protecting the owner's personal assets. Understanding and making use of the benefits that come with business lines of credit that do not require personal guarantees can be a smart move towards achieving sustainable growth and financial resilience for firms as they continue to navigate the intricacies of the economic landscape.